So I want to talk a little bit about selling short, why I do it, um, and I'll go through a couple of the shorts that I prematurely covered. Today would have been another 5K day just on the short side. I short things to, so I mentioned it many times before. I look at my account as a supermarket basket. I mean, you guys are going to say, like, Serge, what are you talking about? Well, I'm trying to make it as simple as possible. Obviously, a lot more goes into it, but to keep it simple, stupid method, to stick with that method, if I have 10 positions on, two could be short, three could be short, depending on where the market's trending, six could be short. Because when you do, you guys must understand something. You guys all experienced what happened in April. You were all around in April, but I've been through this for the last 30 years, many times. Okay, the dot-com bubble. You could have bought every dip and got hammered. 08 GFC. Okay, we've had mini ones in between, but we're talking about the major crashes. Pandemic, right? Last year, Japanese yen carry trade crisis. This year, the tariff musical chairs crisis, right? I hope you're noticing that the saying that my mentors on the desk hammered into me, I can hammer into you, which is stocks walk up the stairs and they take the express elevator down. There is no question about that. So when I see fit, I do short. And I'm not talking selling puts, selling calls, doing this. I can do synthetic, obviously, but I short actual physical shares. And you may just say, how do you do that? How do you sell something? The first question I get asked when I talk about shorting is, how do you sell something you don't have? Good question. The way you do it is you borrow from the broker that you're working with. And some stocks, there is massive costs for that. So if you're going to do it, please be careful. Because the people who are lending you the shares, and if it's really not available to borrow, they will ask for some exorbitant amounts for you to be able to borrow their shares and sell short. It's just like a regular transaction. So in a regular transaction, we have two sides, which we all know. You buy first, you sell next, you buy hopefully at a lower price, you sell at a higher price, you close the transaction, we're done. There's a realized gain or a realized loss. That's that. On the shorting side, the way it works is you sell first, and then you buy back at a later date at a lower price, preferably, hopefully. However, shorting comes with unlimited risk. Okay. What is that? Well, you may say there's unlimited risk to the downside as well. Well, not necessarily. So if I have a $10 stock and I go short, all that can happen to that stock is go to zero. Now, in my 30 plus years, I have never seen anything trade below zero. Maybe it will happen. I'm being facetious. So if you short something at 10, you can only go to zero. If you short something at 10, you could go to 1,000,000. So the risks are immense. So when you are going to step up, put your big boy shoes on and short things, you have to do it. You have to do it sensibly. You have to do your research. You have to do all kinds of things before you step up and short something. So I frequently do short things, and I'm teaching my group how to do it. In fact, a couple of them did it better than me. So the idea is to give you all these tools, right? All these tools to add to your toolbox. And for each occasion, there's a tool. Now, shorting may be a tool that you use maybe once a month. Now, if the market tanks again, you guys will see my account. It'll be all short, literally all of it, everything. Maybe with a couple of long positions to hedge. On the upside market, I'll be, let's say, to keep balance, I'll either have index puts or I'll have a couple of short equities, but then I'll be long 7, 8 equities. And those 7, 8 are preferably ones that I think are going to outperform the market, and the shorts I think are going to underperform the market. Because you guys must understand something. There are many examples. For a year and a half, AMD was going down while the market was making new all-time highs. Nike, the same thing, right? For 3-4 years, Nike has been going down. Okay, while the market made 150 all-time highs. So if you're short Nike, you're in an underperforming stock that you're short, and then you're long other things that are outperforming. So that's how you increase your return overall. We all prefer obviously being in an outperforming stocks. Outperforming meaning if the market goes up 2%, your stock's going up 10%. For example, Robinhood, outperformer, Palantir, outperformer, all these flyers, right? Or, there are many. But what happens is that a lot of people get caught on a downdraft when things end, because there is also a saying my mentors hammered into me is that trees don't grow to the sky. That's a fact. Everything stops at some point and then they get sold out. Now, that is the game I'm playing. And it's risky, but also the rewards are very high. And so over this past week, I was short 3 equities. I'm still short 1. And I was long a bunch of other equities. Well, the reason my trading account was hitting all-time highs is because my longs are doing well and my shorts are going down. It's rare that you can set up an account that literally everything you're doing is working, right? It's very rare. But if it does happen, that's wonderful. It's difficult. It's really difficult. But I try my best. So that's shorting for you guys. If you have questions, please put in the chat. I'll go through it later. Shorting is something that's necessary for everyone to understand, to comprehend, and to be able to execute when the time is right. You could have told me, well, Sergio, what if you shorted Palantir? I have shorted Palantir and I made money, and the group did too. But there's a time for it. You can't just go because you created some sort of personal bias. Oh, Palantir is expensive. Oh, Tesla is expensive. Oh, Hood is expensive. Of course it's expensive. Everything is expensive in the market. That means nothing, right? But there are times that you short. And literally, actually, you can make more money shorting faster than you can make money on the upside. Now, that's a given. That's because of the fact of stocks walk up the stairs and they take the express elevator down. How many examples I could put in front of you, right? What happened during the 20% market sell-off? What happened to Palantir, right? It goes from 130 to 60, get cut in half, but it took Palantir a year to go up 100%, but to go down 50%, it got cut in half in like a month and a half. That's the perfect example of, right, walking up the stairs and then taking the express elevator down. Same thing with Robinhood. They got up to 70 plus. That thing hit 30 in a blink of an eye, right? Yes, now it's back to 100. Fantastic. But what I'm saying is that there is a time to short. And, it depends on certain things. And then even if the market conditions are good, like I shorted 2 stocks and he's here, Doug is here. He tagged along. He actually made more money than I did. And he tagged along. And although market's making all-time highs, those 2 stocks that I shorted tanked. Because there is a reason for that. And not because they had bad news, not because it was this, not because it was going back to the trees don't grow to the sky attitude, right? So you find things that are going parabolic, you find things that are extremely stretched, you find things that are throwing bearish divergences, you find things that are obviously fundamentally extremely overpriced, but then now the technicals are kind of deteriorating under the surface, and you figure all this out and then you short it. And one I shorted is down another 15 points today, which I covered yesterday. And if you guys watched the live, you guys figured it out. It was Sezzle. Another one that Doug covered today, made a ton of money, is TSSI. So, but again, I don't want to get into it too much. You guys need to put that tool in your toolbox. It will become very valuable to you at some point. I'm not telling the market's tanking. I'm not telling you the rug pull is coming. I don't know. Market's doing what it's doing. So